Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar quickly gave up the challenge towards that topside area around 69.50-60 area, also the 60-day moving average as well. From the rejection, has put pressure back on the downside. I'm trying to ascertain just where the support is, and it's roughly around 68.5 to 68.60. As we can see, there's a little bit of momentum coming back into the market, and as long as we don't see a New York close under 68.50, there is hope of a rebound. And looking at the technicals, there is still a little bit of divergence to the bullish case here, so it may save the market from falling lower, and that is we could see a rebound back towards the top side of 69.5, 50, 60, where the challenge was previously on Tuesday, and reassess from there. Looking at the euro, well, to some surprise, it's continuing to hold above parity as the market looks now towards the key event this week, which is the August US non-farm payrolls report, which will take the center stage this Friday. While last month's data exceeded forecasts, global markets are expecting a sharp reduction in the non-farm payrolls growth this week, with the August figures predicted or forecast to come in around 295,000, or roughly near that level of 300,000, with the July coming in at 528,000. In other data, the US Labor Department showed a record number of jobs opening, indicating that the recent interest rate rises have not slowed the labor market, and that is the US job openings increased by 199,000 to 11 million, which is last month's number, and also ahead of the forecast, came in above 10 million since 2021. Looking ahead, though, meanwhile, some viewing that the European Central Bank policymakers want to discuss, that is, a 75 basis point rate hike at their meeting in September the 8th, even though recession risks loom. Looking at the euro, as I mentioned, the last 3 days have been quite strong and supportive to the bullish case, and therefore, while intact, while the dollar index has now consolidated over the last 12 hours and looks around 108.70 after earlier this week, we saw a fresh 20-year high of 109.42. As I mentioned, the retreat from those 20-year highs, the fact is that the euro has or is in a prime position to take the challenge up towards 100.70.75 and reassess from there. The dollar yen still has pretty much enough room, or at least in a prime position, to take one more strike at the top side, but towards 138.80 to 139.50 could get into a little bit of trouble due to the fact that there is divergence to the bear case, and there is furthermore a possible rejection from that top side, and I do anticipate a pullback to 136.80. Sterling, well, the market was a bit weaker and posted its second outside range day or engulfing candle, which does in turn support a bear case. But what might negate that call is the fact is there is bullish divergence, and therefore could stage anytime soon a rebound that is back towards that top side anywhere of 117 to 118 and reassess. The market for gold is still struggling, as it now posts or potentially posts its fifth straight month of losses, as investors grapple with the prospects of that high interest rates are here to stay until the US Federal Reserve can or attempt to bring down inflation. Nevertheless, the market has found its support again around 1,720.22, but a break beneath there and a New York close under there would support further indication that we are heading towards 1,680 and reassess from there. Wrapping up with oil, exceeding its target of $96 a barrel, the market was a little bit apprehensive in taking the challenge towards $98 and therefore stumbled very heavily towards the support level around $90 a barrel. If we see a New York close, that would reinstate the downside under 90 to $86 a barrel. Nevertheless, until we see that and to support this engulfing candle, A break above 94.35 would negate the bear call and see it rise back to $98 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the interest rate report, and I hope you enjoy the rest of the day.